Alright guys, so just confirm that you can hear me and we can go ahead and get started. And let me know if the mic is too loud or anything like that, that way I can put it down. I'm going to go ahead and post this on, I'm going to repost this as soon as we finish. That way anybody can play it back and get the whole thing if you missed the beginning. Just waiting on somebody to confirm that you can hear me and we can go live. Okay, cool. So it looks like you guys can hear me. I'm going to go ahead and get started. What we're going to do today is we're going to go over all the chart requests that everybody requested. And then I'm going to go over SPY and what we should expect for tomorrow in terms of the market. As you guys saw today, we spent most of our time in the red. However, we did recover towards the end of the day and SPY shot up and broke out of the channel down pattern, taking most stocks up with it. Without further ado, let's go ahead and get started with all the chart requests. We're going to start with Rob. You requested Disney and PRTY, which are both part of our alerts. So let's go ahead and start with Disney. For those who are not familiar, the system that I'm using to chart here is called tradingview.com. It is completely free, but it does have a paid option that allows you to place alerts on stocks, but we won't really get into that. I just want to let you guys know what system I'm using. But it looks like Disney today had a channel down breakout. As you guys could see, this channel down that I've drawn out on the stock was drawn there yesterday, and the stock broke out of it in the past 2 days, and the stock moved sideways. So anytime a stock that is channeling down like this, just assume that it is a bullish pattern that's being created, and the stock is just willing to find a way to break out of the channel down. As soon as it does, typically the stock will consolidate sideways before moving up. And now Disney is moving towards this next resistance of 117.50, which happens to be its resistance because it's where it's gotten rejected at once and twice before. So after the stock breaks out of 117.50, 117.50 automatically becomes your support, and it looks like it's leading to do so. The RSI is still looking healthy. The daily candle is still looking healthy. All we're looking for is for the stock to push over 117.50. That becomes our support, and our new trading range is going to be between 117.50 and 122. So we should expect the stock to consolidate in within those two price points, only because after it breaks out, you should automatically assume that the stock is going to take some time to cool off from that breakout. Anytime a stock breaks out, it's going to need time to consolidate, and that's exactly what's going to happen here. Now, if the stock does fail tomorrow and it doesn't hold this level, you need to place a stop loss at the low of the second candle. So the low of the 2-hour candle here is at 116. So you don't want the stock to fall below 116 because that is a significant support for it. If it does and you have a higher risk tolerance, you can give it all the way down to 114. But I don't recommend holding the stock any further because that would break below the initial channel down breakout, giving you a more bearish move on the stock that's likely to fall further down. But everything's still looking good with Disney. You don't have much to worry about. This is looking like a green day for it tomorrow. So next is going to be PRTY. So PRTY is one that we entered late in the chat today. I like what this stock is doing. As you guys can see, the stock had a massive breakout not too long ago. After the stock broke out from the 80-cent mark, and then it pushed up. You guys could see that. And then the stock pushed back down, retested the initial breakout area, came up again, and then it needed to come down because check this out. So as soon as the stock made this high, the stock hit the RSI, became a little overbought on the 2-hour candles, and the stock needed to pull back down, and it did so perfectly to the previous breakout pattern before it bounced back up, came back down, and now it's creating this pennant pattern for you. Automatically, you should assume that when the stock starts to make a pennant, as soon as you start seeing it bottom out, as it did here, you can see that the stock made a double bottom right around the 123 price target. So that price point automatically becomes your support, right where it bounced twice. And now you can assume that the stock is going to be moving back up after creating the pennant pattern. But one thing to keep in mind, that the safest play to trade this stock on is if it breaks out of the 160. Considering the stock is right between 160 and the 122 support, we were able to get in on it with a different strategy. So if the stock was trading at 160 or 155, you wouldn't want to enter it before the breakout. You would want to just wait for it to break out and use the breakout strategy and use 160 as your support. But when you're able to catch a stock on the bottom of its trading range, it's a better entry for you because at that point, you can set a stop loss below the support, considering the stock is not so close to the top anymore. If you enter the stock at 155 and your next support is not until 122, now you have a 40-cent gap between you and your stop loss, rather than entering near the support and having a very short gap between you and your stop loss. But PRTY looking good overall. Our very first price target is going to be 160 because that is its next resistance. At 160, you should consider taking profits or closing down a little bit of your position, waiting on the stock to confirm another breakout. Add more on the pullback. So anytime the stock is going to break out, it's going to pull back. So after the 160 breakout, the stock is likely to go up, come back down to retest 160, and your perfect entry point is going to be on that pullback. You don't want to you don't want to buy the stock on the way up. You want to buy it on the pullback, and you want to place a stop loss just below 160 to protect your position. The very next price target for the stock is the very next place it got resisted at, which happens to be at $2. So there's a lot of potential coming from the stock. All you have to do is just play your cards safe. Don't chase it on the way up. If you're not in the stock already, wait for it to break out and pull back, and your entry could be on the pullback. Overall, the stock's still looking pretty healthy. I like to always look at the daily candles. So those are the 2-hour candles. If we take a look at the 1-day candles, we can see that the stock had managed to close just above the 10-day moving average, and it saw a little bit more volume as it bounced off that double bottom. So still looking good over here. The RSI still has a lot of room to run. Overall, the stock looks good. It's going to make a move within the next few days. It may not be tomorrow, but if we hold strong and we just keep that support line stop loss firm, then you'll be in safe hands. Now, in terms of the next chart request is going to be Boeing for Julian. So Boeing, really popular one. That stock's been everywhere in the past few days. So first of all, let's take a look at the 1-day candles and see what it's doing. So this 1-day candle typically means that there is a trend reversal. And considering that Boeing is not exactly trending in a specific direction, we can't really use this candle as a trend reversal. But we do have to take into consideration other factors that are around this candle, and that's going to be the 10 and the 20-day moving averages. You can see the orange line is the 10-day moving average. So it takes the past 10 days of trading and it weighs out the average of all of the price points, and it tells you if the stock is trading above its normal 10-day moving average or below its 10-day moving average. And in this case, it's trading below the 10-day moving average, which as a bullish trader, you don't want to be in a stock that's trading below its 10-day moving average, because it'll automatically act as a resistance line. So Boeing tried to make it over the 10-day moving average. Here you could see by the wick at the top of the candle, that means that the stock went to a high of 181.58 at one point today, but it closed at the top of the candle, which happens to be below the 10-day moving average. So now that we've deciphered what the daily candle is looking like, we can go into a micro level time frame and see what it's doing on a micro level. Boeing looks like it's doing a cup and handle pattern. So far I'm liking what I'm seeing here. It almost had a double top at this very point right over here. If we zoom in, you can see that the stock hit a top and then hit a top again, but it was quick to recover and it managed to push off that double top. Therefore, you want to place a support at the top of the double top that it managed to break out of, because that's where the stock had gotten rejected multiple times before breaking out. As you can see on the breakout from that double top, the volume pushed up a lot higher. So as soon as the stock crossed over that 177.30 mark, the stock broke out and gained a high momentum of volume. But it didn't exactly put itself in very safe trading range, because notice that even though the stock made a high, it still is lower than its previous high that was made here, and it got rejected off that 181 price point. So your main focus for this stock tomorrow is for it to push itself to the next trading range, which is going to be between 181 and 183. I'd like to see the stock push up and then consolidate between these two price points before making any higher moves. So your safest entry for this stock is after it breaks out of 181 and it makes the 181 to the 183 its trading price range, only because at that point the stock is no longer making lower lows. It's no longer hanging on to a sloping down pattern, and it's going to start moving up in an equal pattern, eventually breaking itself back up to a bullish manner. So I hope that makes sense. Boeing is not ready to trade just yet. Wait for it to break over 181, unless you have shares and you just want to hold on to them for quite a while, because it will make its recovery sooner or later. The next one is RCL, also for Julian. So It looks like RCL and RCL and Boeing have a very similar pattern going on. Let's see what its daily candle did here. So its daily candle looks a little bit stronger than Boeing, as you guys can see that RCL for the day had made a bullish engulfing. So it looks pretty good so far. The stock's daily candle fully engulfed the previous day's closing, and it closed over the 10-day moving average, which is a very good sign for the stock's future, or near future at least, because as you could see, when it engulfed the candle before, the stock shot up the next day and went up again the next day, but it faced this candle, which brought it back down. But as far as right now, this candle is looking bullish. There was a surge in volume stronger than the previous day, so the stock may make its way back up here. Now let's take a look at what it's doing on the short-term candles. So if we look at the 30-minute candles, you can see that the stock, so perfect example of what a positive divergence looks like here. I know, Julian, you've asked me about this before. So as you guys can see that the RSI is making, the RSI here is making a higher high. So the stock made a low and made another low, but the RSI made a low and then made a high on that second low that the stock had, which is called a bullish positive divergence, which typically means that the stock is going to start reversing. It doesn't guarantee it, but it is a good sign that you should take note of. Whether you are in a stock or not, you should take bearish and bullish divergences seriously and take notes of them when they happen, because they could signal a reversal for a stock, as it did here. The stock made that positive divergence and then it started going back up, got rejected at 56. Therefore at 56 you need to place a resistance point, because that's the place it got rejected from before getting pushed back down. The stock channeled down for the entire day before making a breakout out of that channel down. As you can see right over here, the stock was channeling down, and finally it got a surge of volume and it broke out. Now the stock's support line is going to be the pullback area in which it pulled back from. So that's going to be right around 48.82, and that's because that's where the stock pulled back and bounced back on this candle after the channel down breakout. And so now the stock, we're looking for the stock to consolidate between these two price points. 48 and 56 is a very large trading range, so we have to see if there's any possible closer resistance points that we can focus on, and indeed there is. If you guys can take a look at the $51 price point where the stock had gotten rejected before, that could be another resistance for you to trade off. So you want to make a trading range between 49 and 51 to start with. Expect the stock to consolidate between these two price points before pushing any higher. Your next price target is going to be 53, because that's where the stock got rejected before on this candle right over here. And so expect the stock to consolidate, break out, consolidate, break out. Unless the stock falls below support, that's when you want to exit the stock completely and take your profits if you're in it. But overall, RCL is looking healthy. It's looking like it wants to push back up. Let's see. Amir, you asked for SE. I know you asked me about this one this morning. As you can see, we actually had done something on the stock before and it didn't even work out. The stock, we had done this prematurely, and the stock ended up pushing higher before pulling back. So as you can see, it's not always going to work to the T. The stock ended up pushing higher before pulling back and then going back up. So good for them. They pushed higher, but you always want to take into consideration, anytime you see a stock is going up too vertically, the stock is more than likely going to have a strong pullback, as it did here. It pulled back from 100 down, 115 all the way down to 100 when it became too stretched out. So that's a good example right over here. But let's see what the stock is doing on the daily candles. So it looks like the stock is creating a negative divergence. So the same thing that we just talked about, but the opposite. You know how we pointed out a positive divergence? The stock here is making a negative divergence. So as you can see, the high for this stock at $114 is it's making another higher high as of today, but the RSI is making a lower low. Therefore, you should take that into note. You should take that into consideration if you want to trade the stock as a bull, because it may very much have a pullback due to this RSI. Let's see what it's doing on the intraday candles. If we zoom in a little bit and we take a look at the 5-minute candles. So to be quite frank with you, this is not a chart that's really tradable. I'm not really seeing a very good trading range or any type of setup that you can really trade the stock on. As you can see, the stock just kind of bounces up randomly. Take its time and develop a little bit longer. If you are dying to trade the stock and you want to know the support lines and resistance points, your support line is going to be at 123 and your resistance is going to be 126 before the stock breaks to all-time highs. Manny, you asked for KIRK. So let's start with KIRK. Let's see what it's doing. So far, I like what this stock is doing. It looks like the stock broke out, pulled back, broke out again, pulled back, but it never fell below the support line. So you have multiple support lines on this stock. You have a support line at 220, which is the pullback price point from the initial breakout. So notice how the stock broke out at 220 right around this area. And as the stock broke out and pulled back, on its pullback, the stock dropped right back down to the initial breakout price point, which was a perfect entry for anybody interested in the stock, because this is the place where we expected it to bounce, and it did so perfectly. The stock bounced up, made a high at 310. Therefore, you should put your resistance at $3.10 because that's where it got rejected, and the stock pulled back. But notice how its pullback price point never exceeded the previous support. The stock bounced back and made a higher high at 240 and kept moving up. Therefore, the stock is looking like it's in good hands. Let's see if there's any other resistance points in your way that you can play off. Looks like there is a resistance at $2.80. So if you're not in the stock already, I would recommend that you would do a strategy that's a breakout strategy. Wait for the stock to break out of 280, pull back, you can enter. Very next price target is going to be 310. If the stock breaks out of 310 successfully, you update your stop loss to just below 310 and you ride it up to the 371 price target. The reason why the 371 price point is the price target is because that's where it got rejected on the initial breakout. So it's looking pretty good here. Let's see, you have DLPN is also for Manny. Dolphin Entertainment. I don't think I've heard of this one before. Let's see what the stock is doing on the daily candle. So the stock looks like, so if you guys are not familiar with with candles, this is just the 1 day candle for Dolphin Entertainment. The stock on the initial opening price point, it opened at 99 cents and pulled down instantly to the 94-cent price point, and it used the 20-day moving average and bounced back up. So it used it as a support, which is a good sign. It had a surge of volume and it put it past, or actually it put it right at the resistance point that it created 3 days ago. So notice how the stock's wick went all the way up to 107 3 days ago, but the stock pulled back and closed at 103. This long wick at the top represents the point that it got rejected from, and the stock happened to close right at that point. So stocks that close right at resistance points can either gap up or open flat the next day, and you want to use that resistance point as the breakout point. So I would suggest that you do the same exact thing that you're going to do with KIRK on this one. Use that 107 as the breakout point, and if the stock breaks out successfully, then 120 is going to be your very next price target. But overall, I like what the stock is doing. It's not my favorite setup, but I could see a move coming from it. If it breaks out of 120, expect it to go to 140. We'll definitely keep an eye on this one tomorrow. Mr. Mustafa, you had IBKR. Okay, so this stock it's an interesting one because this is exactly what we talk about when we say that the stock is becoming too stretched out. Notice how the stock had stretched itself out before at this very point and then pulled back instantly because it just couldn't handle how much it was getting bought. Same exact idea is happening here. The stock is stretching itself out. The RSI is already overbought, so expect the stock to pull back to at least the $47 price point before continuing back up. Even if it doesn't pull back to that price point, I would still stay away from it, only because I'm not a big fan of chasing stocks on the way up. I would like them to go back down before I buy them back up. So you can use 47 as your next support if you're in this stock. It definitely has potential considering it broke out perfectly over 45 and it broke out perfectly over 47, which was a major previous resistance for the stock. So there's tons of potential in the stock, but you need it to pull back before it continues pushing back up. Alrighty, so that was IBKR. Now you have BBIO. Let's see what the stock is doing. Let's take a look at the 1 day candles. So nice move from the stock. The stock managed to close over the 20-day moving average today, but fell shy of the 10-day moving average. Strong bullish candle. Bullish volume is not as strong as bearish volume, so that makes me a little worried that maybe this is just a bounce before it goes back down. So there's no solidified move on the stock just yet. Let's see what it's doing on the short-term candles. I like what the stock is doing when it comes to this rounding bottom because it looks very fluid. So notice there's not a sudden move to the upside or the bottom side. The stock is just making a nice bottom rounding bottom, but the stock is still not in safe territory until it pushes back up over 33. So as far as I'm concerned, the stock is not in trading range just yet. I'd like it to push over 33, make a high for us to trade it off the $34 breakout. So I would say that the stock's not ready just yet. I would let it develop a little bit longer. Henry, you had UCO, which was also part of our trading, which was part of our alerts. So UCO, as you guys could see, is finally. So anytime you see a row of candles that looks like this, it means that there's indecisiveness in the price of where to take the stock next. So you could see the stock had a doji candle, an upside down hammer candle, an upside down hammer candle, but looks like a doji. So there's a lot of indecisiveness in the price here. And then finally, the stock made a move to push up with stronger volume. So that's a good sign for the stock. In terms of its short-term candles, let's take a look at what it's doing on the 30-minute or the 5-minute candles. So the stock is good. It's within trading range. It managed to recover strongly off that pullback that it had to $30, and now it's using the $30.80 point as a support. So tomorrow, what you could expect from the stock is it either falls below $30.80. At that point, you can either cut losses, or you can give it to $30.60, or you can use the $31.20 price point as a breakout price point. But overall, the stock is looking good. You can see that it's recovered nicely ever since we started opening back up. And you know, UCO is not going anywhere. You're not going to be worried about a stock, you know, random news that destroys the stock or anything like that. It's looking like a good, healthy stock to be holding on to, especially if you didn't buy options. But overall, the stock is looking pretty good for our trade tomorrow. Let's see what NKLA did today. I know that was a very popular name because it had a major recovery. Let me go ahead and zoom out into NKLA's recovery, which let's go ahead and just once again go through this. So the stock broke out from the $40 price point initially. You guys could see that the stock had a consolidation period right before it had its major breakout, and then it popped off after $40. And when the stock pulled back, and it needed to fill that pullback because everybody needed to take profits. So everybody who bought up the stock on the way up to $90 started taking their profits right at that $90 price point, pulling it back all the way to the initial purchase price point. So everybody who purchased at 40 finally took all their profits and hit all their stop losses all the way back down to 40, and then they started buying the stock back up. The stock today managed to gap up, and it pushed over the 47.80 resistance, only to hit the $55 resistance, which we had drawn out for it yesterday. So we noted that the $55 price point was a resistance point, and the stock got rejected off of it perfectly. So now your new trading range is going to be between $50, and the reason why I say 50 is because that's the price point in which the stock consolidated before it pushed back higher. So you guys could see that the stock consolidated right around 50 before it pushed higher. So your new trading range is going to be between $50 and $55. So expect the stock to consolidate between these two price points. It either breaks below and falls to the next support, or it breaks out and pushes over to the $60 resistance. As far as I will tell you guys though, this is a very dangerous stock to be in, because if we take a look at the history of this stock, we really have no history. And when it comes to stocks with no history, there's really no historical analysis to analyze. And when it comes to no analysis to analyze, we don't have clear support and resistance lines to go over for us to trade it successfully. So overall, a dangerous stock to be in. This is what we call a high risk trade. I would definitely just kind of, I would stay away from options on this one, and I would also stay away from holding it overnight. It just doesn't seem like a very safe stock to be holding overnight. I know that stock was Henry and Abbas's requests. Abbas, you also had FCEL. So let's see what FCEL has been doing. Overall, I've been loving what this stock is doing. It was only about time that the stock started seeing some action, and it finally did. As you guys can see, the daily candles are all green for the stock. The 10 and the 20-day moving average are about to cross up, which is another bullish sign. Volume is not letting down. It's still very strong. The RSI is not overbought just yet. There's no negative divergences. So overall, the daily candles are still solid on the stock. Very nice fluid breakout. There's no forced breakouts in the stock. There's nothing that's moving too vertical. Everything is fluid, which is my favorite word ever in the stock market, because I love when stocks move. Don't have any sudden movements. They have a nice, easy movement to track, and you can even call this a cup and handle pattern. As you guys can see, the cup is being formed, and now the handle needs to be formed as well before the stock breaks out. Cup and handle patterns are typically bullish. The cup and then the handle, and the stock is likely to break out over $3 and push over to 320, which is its next price target, and then 340, which is the price target after that. The reason why these are the price targets is because that's where the stock had gotten rejected off before, and it got rejected off before once again. But when the stock does break over $3.40, that move is going to be pretty crazy, because that's a very high point that the stock has never seen in its recent times, at least. So if the stock does manage to break over 340, it will push to 350, because that's where it got rejected before pushing to the $4.50 price point. So it may hurt you a little bit to see your profits in the negative on this one if you hold it longer than the 350 price target. But if it does indeed manage to break out of that price point, the stock will set itself up to a bullish stance. So you can see the stock is making lower lows until it breaks out from that price point, and the stock will reverse its trend on the overall market and has a very good chance of keep on moving up. But I wouldn't hang on to those words too extremely, because the stock still has to prove itself over the next few earnings before we can call it a safe stock to hold for a very long time. Daniel, you asked for GOGO, which was dropped from our alerts, unfortunately, only because I saw a little bit of selling volume that I didn't like. But let's go ahead and see what the stock is doing overall. If we take a look at the daily candle, the stock's daily candle had a bullish engulfing of the previous day, which is a very good sign. Also, buying volume from the previous day is a lot stronger on the bullish side, so that's also another good sign. The stock has been moving up fluidly as well. It's forming another cup and handle pattern, so same exact thing that you actually that we just talked about when it came to fuel cell. So let's see what its stock is doing on the short-term 30-minute candles. So I'm loving what the stock's doing. It's looking pretty fluid here. This round bottom is taking it to another breakout. Let's see if the stock did anything the after hours. No, it doesn't look like it. So the stock's next resistance to focus on is going to be 350. If the stock manages to break out of 350, then 380 is going to be your next price target. Overall, the stock still looks healthy. I dropped it from our alerts prematurely maybe, but the stock did look pretty good towards the end of the day. So if you are still holding the stock, you're still in good hands. I wouldn't stress about it too much. Let's see what DVAX is doing, which I completely forgot to circle back around to today. But great find on DVAX, Daniel, as well. The stock looks like it broke out of a channeling down pattern. You can see that right over here. It was channeling down for a while, and then it finally made its breakout. It broke out, consolidated, formed this pennant, and then broke out again, formed another pennant, pulled back, which was healthy, and now it's so if the stock had broken out right at 950 from this very price point, I wouldn't have chased it at that point, because the RSI was already high. The fact that the stock pulled back and bounced off that 20-day moving average is more of a reason that I would be more intrigued by the stock, because it managed to cool off its RSI before even attempting a breakout, which is something you want to see. You don't want a stock to just keep on breaking out. You want it to pull back. You want it to have those healthy breathing room areas before it pushes to make its final breakout, which at this point would be over the 950 price point. If the stock does break out over 950 successfully, let's see what the price target's going to be. A breakout over 950 will take the stock over to $10.10, and that's because that's the bottom of this very support right over here, which turned into a resistance as soon as the stock fell below it. So around 10.10 is going to be your next price target over the 950 breakout. Just keep in mind that the stock has earnings coming up next month, so you still have some time to not worry about what the stock is going to be doing. Another thing to notice about the stock is that it's a surge of volume today, so that's a very good sign that the stock is going to be experiencing another push up tomorrow, especially the fact that it's in the right field as well. So that looking pretty good over there. Good find, Daniel. Both of them, GOGO and DVAX. You're bringing a lot of heat to the group, I guess. Richard, you asked for VSLR. So let's go ahead and see what VSLR is doing. Okay, so you can see I've already drawn a resistance point at one point for this stock, in which it broke out of perfectly. yeah, it broke out perfectly out over here. So let me remove that. So overall, the stock looks good. I would say that at this point, if you're not already in the stock, don't enter it, only because you could see that the RSI on the daily candles, which is more significant than any other RSI unless you're talking about weekly candles, is already overbought. So the stock is overdue for a pullback. So I wouldn't chase it at this point. I would wait for the stock to pull back. Now, where is my pullback target? Where is the stock going to come down to when it pulls back? A healthy pullback will never exceed the previous breakout point. The previous breakout point for this stock is going to be $13. However, the stock gapped up to $13, and any stock that gaps up may want to fill that gap. Therefore, you need to put another support at $11. So the stock will either pull back to $13 or it will pull back to $11 to fill the gap, and it may bounce up from here, but it will bounce up to from one of these lines. Which line it bounces off of is going to be a mystery to everybody until it happens. So how would you play the stock if you wanted to play it? You can wait for it to bounce off the 13, and if it does successfully bounce off 13, you can enter the stock and place your stop loss just below that price point. If the stock falls back to $11, that's even better for you because that's a cheaper price for you to trade the stock at. Now, let's say the second thing happens. Let's say the stock falls back to $11. Where is your trading range? Your trading range is going to be between $13 and $11. So this is going to be your consolidation area right over here until the stock finally breaks over 13 again. Now, where is your price target? After the stock breaks over 13, your price target is going to be the highest point that the stock made before it got rejected. And at this, and according to this graph, that's going to be at $15.75. Therefore, after the stock bounces off 11, you can expect it to consolidate before attempting to break over 13, and then you can expect it to consolidate before attempting to break over 15.75. Overall, the stock looks like it needs a good pullback. I know this stock may be moving on some kind of acquisition deal. If I'm not mistaken, the company is being acquired by Sunrun, if I'm not mistaken. But keep an eye on that as well if you're planning to trade the stock or hold it for a while. Alexis, you asked for UMC. I think you asked me for this one yesterday, and the stock is doing exactly what we expected it to do. So yesterday we had mentioned that the stock is likely to pull back before pushing back up, and the stock did indeed pull back. So this is just a one-day update since we made this chart. Let's take a look at what the stock is doing. So the stock didn't pull back all the way down to the 268 support, but we did say that the stock looked too stretched out yesterday. Notice how we pointed out the RSI being overbought yesterday on our analysis, and the stock had pulled back since. This pullback is a healthy pullback. You want the stock to pull back, but just keep in mind that I missed a support yesterday. The stock has another support at 275, so it may just bounce off 275 and consolidate between 275 and 82 before breaking out. If you're dying to get into stock, you can get into it now and set a stop loss just below 275 or just below 268. Expect the stock to consolidate before trying to break 282. Your first price target is going to be $2.90. But as far as charts go, those are all the charts that I have for you guys. I'm going to go ahead and go over SPY now, which is the S&P 500, and see what it did today and how and what we could expect from it in the next day or so. Let's take a look at the daily candles. So it looks like the stock, it finally made a bullish move after having a very tight trading range. But I would say that the stock is still within tight trading range. But it does look pretty good considering it broke out of this channel down pattern. So you could see that SPY was channeling down for quite a while, and it finally broke out and now pulled back. Notice on the pullback, it never fell below these moving averages, which is a good sign for the stock. The stock is still trading over the 10 and the 20-day moving averages. It had a strong bullish candle. You can see the stock fell all the way to 312.50 at one point, but it bounced up perfectly and managed to close over the previous day's closing price. Overall, the stock still looks pretty good here. Let's see what it's doing on the short-term candles. So a nice rounding bottom for SPY. The stock never fell below its initial breakout point of 312. So the strongest support that we have for SPY is this breakout point of 312. So you can put a support line right over here because that's where the stock broke out from. It pulled back, bounced, pulled back, and bounced after dropping just below it. So that's why we always tell you that you want to put your stop loss just below your support line, not right at your support line, because you want to give it some breathing room. And it bounced back up. Indeed, the stock gapped up between 312 to 316 over one night, SPY gapped up, which it needed to fill that gap, in which we talked about yesterday and we talked about today that SPY will fill that gap, and it did so today. Notice how the stock fell all the way back down to 312.76 before bouncing back up. Now, it doesn't need to fill the gap perfectly down to the T, but it did fill the gap mostly. Most of the buyers here took their profits and the stock bounced back up, made it over the 315 key resistance that it kept pushing down from all day, and SPY closed just below its resistance of 316.50. It may have pushed up higher in the after hours. Yes, it did. So that's a good sign for tomorrow. Our main resistance to focus on for SPY tomorrow is going to be 317. If it manages to break over 317, then expect it to get rejected at 317.50 and consolidate between these two price points until pushing higher. But it looks like all the indexes are starting to hit all-time highs again. It's only a matter of time before SPY does. Don't trade the news, don't trade COVID, don't trade what you think, trade what you see, and only what you see. Go into the market every day with just a clear sentiment that anything could happen, and you'll be a lot happier than somebody that's going to go into the market thinking that SPY is going to go down when the charts are telling you something different. The charts on SPY are still looking healthy. We're looking like we're going to move into bullish territory here in the next few weeks, unless something dramatic happens. I expect SPY to keep on moving up along with other tech stocks that are taking it up. But overall, SPY is looking happy and healthy. I hope that answers all your questions. I hope I didn't miss anybody's charts. For anybody who missed the beginning of this video, I will be uploading a recorded version. And if you guys have any further questions, let me know if you have them in the chat. Other than that, have a great day, guys. Thanks for checking in. And if you're not already subscribed, please subscribe. That would really help. I'm trying to boost the channel to get more viewers here. See you guys. Appreciate it.